Well, hello everyone. Welcome to Trading a Smaller Account. It is Friday the 13th. So I don't know if I'm going to leave the house today. Actually, today it's a winter wonderland here in Salt Lake City. The snow has been gently falling since I have woken up. And as a skier, and given the fact that it's December, I think nothing beats a white Christmas. So there you have it. But we've got lots to talk about being inside, right? So no problem at all with it being an inside day. And we've got a ton of stuff that we want to talk about, at business as usual with this. We're going to talk about a new strategy today that, it's not a new strategy in the market, but it's a strategy we don't often talk about in this class, and it's a leap. And so it's a long dated option, thinking 10 lords a leaping. We aren't going to do 10 trades, but I thought we'd do one. And and so we're going to look at leaps. We're going to look at long call verticals. We're going to look at the 3 trades that we put on last Monday. And so we got a lot we got to do. So if you are not following me in the land of X, I do post content there on a daily basis. It must be the 13th because I forgot to post that I am teaching a second class today. And so I'll post it after this, but I'm teaching advanced options at 2 o'clock Eastern. So if you'd like to come back and join me for that, you are most welcome. And I post things like that on X along with charts and lots of other detail that I think you might find interesting. So feel free to follow me there at Barb Armstrong CS. We have Mike Fairborn with us in the chat today, and Mike is posting regularly also, so you'll want to follow him, Mike Fairborn CS. Okay, so let's get right down to business. And remember that options carry a high level of risk. They aren't suitable for all investors. We use the Paper Money software application on the Thinkorswim desktop platform. It's a brilliant place to learn. It not only how to become familiar with the platform, but make sure you're familiar with the trading strategy that you are considering trading, that you've honed your skills by practicing in Paper Money where the stakes are low, right? And there are some nuances and differences. One of the biggest differences, let me move my water bottle out of the way, is that short options will never be assigned early in Paper Money. And that can happen in a live account. And we talk about that frequently. Okay, so these are all things that we need to keep in mind as we go through our example trades today. We did start last November 1st with a $20,000 Paper Money account. Our max position size, we all agreed, would be 5,000. And although that seems high, in that was 25% of our original account size, we wanted to be able to do things like buy right covered calls and maybe own stock positions. If you had $1 million account, and next year I'm going to have 2 accounts that we're going to actively trade, and one's going to be a $25,000 account. Well, so we'll reset this account to 25,000, and the other, I think we'll start with $1 million. And if you had $1 million account, you might say, well, I want my max position size to be no more than 5%, not 25%. And that would be totally legit as well. And your max trade risk, we started with a 3% risk per trade, which seems high, and it was high. And it kind of, it might make some people nervous, but we knew that there were some trades that we wouldn't be able to place, if we didn't have a max risk of $400 to $500. So that was why we did that. Now, our current account size is, it has grown substantially. We're currently sitting at 42,500, but we haven't changed either our position sizing rule or our max risk per trade rule. So now our max risk per trade is more like 1.5% than 3%. But until it got to 1%, you might not want to change it. And it's up to each individual trader. Okay. Someone is asking if there are any particular videos on strategies. So Pat, let me ask you this. Are you new to options trading? Because this is a question in the chat. And if you are, one of the things that you might want to consider is going to the Getting Started with Options series. Okay. Yeah, somebody's saying, can we use the same button to reset our live accounts? Sadly, we may not, my friends. How we wish it was otherwise, right? That we could just reset it and, throw $1 million in an account. But if you are new and you are looking for particular strategies, if you come to Trader Talks, and I know that a lot of you come to this every week. And so I appreciate your patience as I share this with somebody that's likely new. But if you subscribe by hitting that button in the bottom right corner and you come to playlist, this is what will come up. The home thing is whatever is happening now. And then if you scroll down, and it's actually pretty close to the bottom. So there's an indicator for each class that's being taught. So when you come to Getting Started with Options, I do a 12-week series. And actually next year, for the first time, it's going to go into someone else's hands. I'm feeling a little nervous about that, but I know Cameron will do a fantastic job. But, it starts with what does it mean to buy a put or a call or sell a put or a call? And then we spend a week on each of 10 different strategies. And we wrap it up with the 7 things I wish I had known when I started trading. And if you guys feel like you're pretty advanced, you may still want to go back and watch this 7 things I wish I'd known, because it's really not just about trading options. It's about trading, period. Okay. So this would be a good place to start. Now, once you've started there and it's not quite complete yet, my bad. But, despite, we do other things in addition to teaching. So, I am creating a series of example trading plans. So the next one up, I've promised, will be buy right covered calls. And I'm posting these in the order that, the Getting Started with Options series has been taught over the last 5 years. And eventually we'll probably have 12.5 different trading plans, but you may want to come here. And if you're new to all of this, if you just scroll down to the bottom, there's a whole bunch of short videos on customizing your Thinkorswim charts and watch lists and all that kind of stuff. There was a comment, and if you ask questions as we go, I can answer them. But if you're watching this in the archives, as the majority of people do, if you type your question in down below, and one of the questions was, can you show me again how to create a scan of each of the sectors and create a sector watch list? And so you will see that pop up at the top of the orange. No, actually, it will be a Thinkorswim. It'll be here, and that will probably be there by the end of the day. Okay. Yeah, where's the best place to learn the techniques of placing trades on options? Well, I'd start with the Getting Started with Options series if you're not familiar with those. And then if you go and watch that 7 things I wish I'd known, they'd say pick one strategy. So once you're familiar with the strategies, if you come to a class like this, and here's my segue back into our, kind of regular curriculum, is if you come to a class like this, we place lots of trades. And so, you'll learn the techniques of placing trades and using, example trading plans and that kind of thing. Because if you look at it right now, let's come to activities and positions. It's saying we have 24 working orders in place. That means we have 24 trades on, that we have example trades that we have placed, and we manage these trades as we go. Okay. And then we place new trades every class as well. And I never teach this class. I think I've been teaching this class about 5 years. I think there was one day in the last 5 years where we didn't place at least one example trade. And often we place like 3 to 5. Okay. Okay. So that's that. All right. Yeah, and there are courses you can do also. And I'm a product of this education. I started back in 2011. I sometimes on a Saturday morning, I'd make myself a coffee. I'd get cozy with my laptop. I'd do a whole course and listen to some of these classes. And I committed to dedicating an hour to 2 hours a day. I'm starting over again at the beginning, first class in 2025. We will be dark between Christmas and New Year's. There will be no live webcasts. Okay, just FYI. Okay, so let's have a quick look at the market. So we've got the S&P 500. It's up 27% year to date. If I make this a year to date chart, I mean, how can we look at this as anything other than bullish? It is bullish, right? And even though it's been pulling back for the last 2 days, if you had a decent arm, you don't have to be Trevor Lawrence, to be able to throw a ball and hit the all-time high on this index. All right. All right. And then when we look at the NASDAQ, it hit a new all-time high today. So there's bullish, on steroids, up 29% year to date. If you go out and Google it, on average, this index has done very well, over the last 30 years. It's probably on average been up in the neighborhood of 13% a year. Today, like this year, and the year's not quite over yet, but up 29%. So we're going to call that, I'm going to put a bullish sticker on that one too. So that's 2 for the bulls, 0 for the bears. How about the Dow? Yeah, don't bring up AVGO. It really went up yesterday. Oh, I hate earnings trades. What can I tell you? I shouldn't say that. Earnings trades can be humbling one way or the other. So here's our Dow. It too hit a new all-time high back at the beginning of December on the 4th. It's been pulling back, currently flirting with the 30-day moving average. But when we look at this as a longer term or an intermediate term, it's bullish. One could argue that, it's been pulling back for the last 6 or 7 trading days. But, it hasn't, one wouldn't look at this and say the uptrend is now complete. The uptrend is over. I don't think anyone is looking at this chart and thinking that. And this is up 16% year to date. So it's in 3rd place, but still not too shabby. And then, our Russell up 15%, and it kind of like the Dow has been pulling back too. And today crossing that 30-day moving average. So some might be looking at this and going, could this be setting up a double top? Well, only time will tell. Only time will tell. And, it's flirted with this 10-day or this 30-day moving average since what? July. And, here it crossed under for a couple of days. Here it just came down, it came under for a few days and then it continued on up the hill. So we'll just have to see. Yeah, we'll just have to see where we're going. Okay. So I'd still vote 4 for the bulls, but that's just my interpretation. And I have been wrong, before. And, then when we come and we look at our VIX, we're at 14. We're still, low in the grand scheme of things. We're at the low end of the range where we've been for the year, being under that 15 mark. And then if we come over and we look at that customized watch list, and if you're, wondering how we did this, you can go to that trade management mini sessions and scroll down to the section on Thinkorswim. And I walk you through how to set this up. But consumer discretionary been leading the pack, followed by communications, financials, and technology. And so we're going to be talking a lot about this come the new year. Okay. When we're looking at setting up a whole new portfolio. But when we look at this now and we say, okay, here's technology. Would that be hitting a new all-time high today? Yeah, it is. Look at that. How about financials? Well, they're kind of like the Dow, right? Like they hit a new all-time high back here at the end of November, been pulling back a bit, but the uptrend's still intact, flirting with the 30-day moving average. Communications hit a new all-time high this week. That's the Metas and the Verizons of the world and those guys. in consumer discretionary, which includes, the car companies and, the cruise lines and the Lulus of the world and all of those, that hit a new all-time high yesterday. So there's a lot to be bullish about. So let's go out and look at, I want to start with Apple. It's the first stock listed on the Dow. It's the first stock, I think it's on all three indices. It's, if we're going alphabetically. And here we have something, it is not up like some of the other stocks. In fact, it's underperforming the NASDAQ, go figure. But it had this period of consolidation that really kind of started in July and didn't break out of until the beginning of December. And this pattern, and next year I'm trading places with Cameron May, and he's going to be teaching getting started with options, and I'm going to be teaching getting started with technical analysis. So I'm pretty jazzed about that because I love technical analysis. I think that it continues to fascinate me. But we have this kind of cup and handle pattern. I know that I posted something on X about this, maybe a week or so ago, but we've got like this 38-point spread. So we said, well, if we take 237 and then we add 38 to that, what do we get? So 237 plus 38, that gives us 275. So we said, well, sometimes things don't quite make it to the target. So maybe we make our target 273. Now, how long did it take this pattern to set up? Well, a week? Well, no, like this started in June and broke out in December. So it was 5 or 6 months. So could we look at a call 5 or 6 months out? Well, we could. Can we afford it? Well, I don't know. Let's go look and see. So if we, and this is a longer dated option, and often we're looking at something in that, kind of 35 to 50 days out. So we're going to come and we're going to say, okay, we're not going to look at January, which is what we might choose if we were doing a short-term trade. We're going to come out to June. Now, the first strike in the money, 1,945, how much can we risk? Yeah, 500. Is this more than 500? Yes. Are we planning on losing? No. But could we lose the entire amount? Yes, you bet your sweet bibby we could. So we got to look at this and say, okay, well, can't afford that. Can't afford the 1,200. Can't afford the 855. You know what? I could, it's a bit of a stretch. We could maybe do this 585 to 595. Now, one of our questions, if you go to our example trading plan on anything bullish, yeah. If we look at anything bullish, it's, does this trade 1 million shares a day or more? We're at 280. And, we've got 11,000 contracts on the June option already. And so do we have a tight bid-ask spread? It's 10 cents. So that meets our parameters. What is the current probability? If I close this, you can see what is the current probability of this being in the money? It's saying only 23%. So that means we've got, according to this, a 67% chance it could expire worthless. But we're using our technical analysis and we've come to a different conclusion. Okay. And, we have a 43% chance of at least coming up and kissing that 280. But what we really want to do, we don't necessarily want to stay in this until expiration. We might put a goal in of saying, what our goal is going to be when it goes up to 273, we'd like to exit the position. Okay. So we are going to come to buy custom with an OCO bracket. We are going to make this a market order that's good till canceled. We've got to make this good till canceled as well. And we're going to say, hey, when this gets at or above 273, the stock, we would like to exit. Okay. And then if we look at when might we choose to exit, we might say for a leap, we're willing to risk all of it. Now, some might say, I'm willing to risk 50%. Others might say, hey, you know what? I'm willing to lose 75%, but if it gets to the point where I've lost 75%, then I'm going to put in an exit. So if I take my 595 times 0.75, well, actually, that would be 446. What I really want is 25% times 0.25. That's going to be $1.49. So if this gets to the point where it's worth, let's call it $1.50, we would like to exit the position. Take our $1.50. We've lost, 75%. But we're going to take our $1.50 and, go home and live to trade another day. And this will be one of those that did not work out. Okay. Now, someone is saying, why not do a call debit spread? Well, I like the way you're thinking, because we could do a short-term trade. And we could do a short-term trade and a longer-term trade and compare them. So, but we're going to put this one in. And really, we'd have to compare this over a longer period of time, and we can do that. And we're just going to put in this leap, compare to LCVs over the same period of time. Okay. Okay, so we've got that one in there. Or did I put it in my long call bucket? If I didn't, I'll go back and I'll move it. But today, it would be a more aggressive entry to buy a long call vertical. And why am I saying that? Well, I'm saying that because today it's pulling back. And, and that's cool. Like, it's kind of, one might argue, and I love to argue. At least that's what my brother would tell you. We've got a bit of a bull flag and a stiff wind going on. And so if we're bullish on this, we could place a long call vertical, assuming that at some point, but we might want to do a long call vertical with just a smidge more time. Like if we're doing the 20 to 50 day time frame on these long verticals, we might say, well, rather than doing the first expiration over 20 days, maybe we go out to the monthly, or maybe, we just give it a little bit more room, a little bit more wiggle room in case it continues going sideways for a hot minute. Now, could we also do a short put vertical? We could. And in fact, we have a short put vertical on. We're currently down on this one just a smidge. 245 and 240 are our strikes. So we have a short put vertical. $240, $245. Or 245. I usually put that first, 240. Okay, and we'll show that. So are we worried about that? No, we're not. And we may have just put this one on. And if you're looking at a trade and going, when did I put that on? We can right click and then come down here to view trades. It says, oh, we put this on the 12th. Okay, we just put it on yesterday. So, sometimes it shows as a bit of a losing position in the beginning, just, the difference with the bid-ask spread. So here we can put our little circle around here that shows us when we put that trade on. So what's the advantage if you're really confident of putting the trade on now? Well, it's at 246. If we put the trade on at 250, and we want to do that 245, 250 strike, we might get a better price if we put it on today. And so if we look at this and we say, okay, we're going to come out to January and look at this 240, 250 strike. Again, we've got thousands and thousands of contracts, 10-cent bid-ask spread, a nickel on the 250 strike. So if we say buy vertical, It's going to cost us 263. And in order for this to be a successful trade, it has to go above 260, above 250, and we want it to go above 250 and stay there. And if you look at our example trading plan is that we want, generally speaking, a 50% gain, which would mean we'd want to exit this one when it's about 293, I'm guessing. Sorry, 393. It's actually 395. So we can risk $500. So we're going to do 2 of these. That puts us just over 500. Single order, first trigger sequence, right click, opposite order, and to exit with a 50% gain, we're going to make this 395. Okay, good till canceled. Oh, I'm hit the wrong button. There is no condition on this. Confirm and send. So how much could we lose? $526. How much could we make? $474. We're saying, hey, if we can make 260 of that amount, we're going to be happy campers. We're going to put this in our long call vertical group, and we're going to compare this to the short put vertical that we placed yesterday and the long call, with the June expiration. And quite often in this class, we'll do that. We'll place multiple trades and then we'll compare them. And sometimes I compare them in class. Sometimes I do a trade management mini session. I know I've been asked, can you just put the ticker symbol in? And the reason that I don't put the ticker symbol in is because I've been asked not to, by some of our behind the scenes team. And so there is a reason for that. But as soon as I start the recording, I will tell you which stock we did the 2 or 3 trades on. I know recently we did multiple trades on Lulu. We did multiple trades on Reddit. I think we may have done multiple trades on Apple. I mean, we do a lot of trades in this class, so, it's hard to keep them all straight. Speaking of which, some people might say like, well, hey, Barb, like you've done, you have all these trades on, like how on earth do you manage them all? And, if we come and we look at our short put verticals, so let's just focus on the short put verticals for a minute. How many trades do we have? 3, 4, 5, 6. We've got 8. Okay. We have 8 short put verticals, and we come over here and we go, are we down more than 100% on anything? No. Are we up really close to 80% on anything? No. We might come over here and look at MasterCard. We're up 54% on that. And then it looks like it may be pulling back. So we may want to come and look at the chart. Now on a Friday, the temptation might be to try and hang in over the weekend because time decay works in our favor over the weekend. And if we look at where our strikes are on this, 515 and 510. So, and where is it trading? At 530. So our strikes on this, here's the 515 that we want it to stay above. So here's our short put vertical, 515, 510. And I usually put these on the chart. So it's up here, but do we have anything to worry about yet? That isn't to say that it can't go, it can't gap down and end up through our strikes and we can't end up snatching a defeat from the jaws of victory, but we've got 2 weeks left on this. So maybe we let this percolate, over the weekend. And that's a decision that each trader has to make. And the same thing with Microsoft. But, it doesn't have to take a long time. And then with Goldman Sachs, yeah, we're down 62%, but we've eradicated half that loss today. So my guess is, if we look at it, is that Goldman Sachs has probably hit a support level and might be bouncing. And so, this is going through our strike. So it'll be interesting to see, and we'll want to watch this closely to make sure that this 30-day moving average holds. And if it doesn't, then we may say, you know what, we're going to call it a day. because we want this to stay above both strikes. And yesterday it was above both strikes. Today it's in between. And you know, in a live account, something can be assigned. We could have this stock put to us. And this is a $600 stock. We don't have $58,000 in our account to be able to buy 100 shares of Microsoft or of Goldman Sachs. But you know, when we sell that put, which is the top part of the strike, that's what we're agreeing to. Yeah. Lois is saying, does it follow that if you keep a short put vertical over the weekend, you should exit a long call vertical on a Friday? It just depends on what the stock is doing. Yeah. So not necessarily. Not necessarily. Okay, let's go look at Palantir. That was one that we were going to look at yesterday, and we didn't have time. And so here's the stock, you know, and if you're not familiar with this company, you can come to the Analyze tab. You know, they build software platforms for the intelligence community, well, the CIA, maybe MI6, counterterrorism investigations. It looks like the last 5 years, their earnings per share has gone up every year. Their book value, you know, and you don't have to look at all of this, but it's there and it's easy, you know, for you to look at should you choose to do so. But if we just look at this trend, this is a stock that's up 329% year to date. And might it continue on up this road? You know, it recently had a high of 80.91. So could we do a call vertical with the expectation that it might continue to go up? And so could we come out here to January? And if we come to January and we do this 72.50.75, it's got to go up $1.40. We've got thousands of contracts, 44 million contracts traded today, or 44 million shares traded today. Tight bid-ask spread, it's 10 to 20 cents. So could we come out here and buy a vertical? We could. $1.10. Well, $1.10 would be, you know, the 50%. $1.25 would be the halfway mark. So, you know, when you look at this, I mean, we're risking 110 to potentially make 140. Now, we're saying we don't care where we get in. We're looking for 50%. So we would take that, well, it's now 113 times 1.5. Sorry, 113 times 1.5. Say, hey, this gets to $1.70. We're going to take our money and run. But how many of these could we do? Well, we could do 4 of them and we'd be under $500, right? And then if we come to single order, first trigger sequence, right click, opposite order, we're going to make this $1.70. So when we're up 60 cents, we're going to say thank you very much to the powers that be in the world of trading. Now, how much could we lose? You know, and we could lose all of it. We could lose this entire 440. And we have had instances where that had happened. Last year, I was in Maui in January. I couldn't access these accounts. And we had a big correction and we had like a whole pile of these long call verticals, you know, where we lost way more than the 50% we intended. So why don't we put in an OCO order? Because sometimes when the market first opens, there's a lot of volatility and you can end up, you know, nicked out, you know, for a way bigger than a 50% loss. And then the market settles down and you might not have been nicked out at all. But so, you know, we've placed this trade, we have our target. How much time does it take every day? Well, we're going to come here. Now we've looked at our short put verticals. We're going to come to our long call verticals. And we've got 1, 2, 3, we got 7 of those. And say, okay, do we have any that are down close to 50% or more? Well, we've got Starbucks. So let's go look at Starbucks. And some people will say, well, I'm going to have a conversation with myself about this. Others will say, hey, the rule is if I'm down 50%, I'm out. And so I'm out. Okay. And there is no kind of one right or wrong way. And the other thing we want to look for is anything up close to 50%. No. So everything that was close, we've closed out on. So we're going to come over and look at Starbucks. So, and the question we ask ourselves is, do we stay or do we go? So we've placed the trade on this day. Our expectation, it was going to stay above this line. It's now come down to this line and we have this inverted hammer. So we're already down on this 83%. We have, how much more could we lose on this? We could lose another we could lose another $80, but it could end up coming up and we could end up losing nothing at all. So we might say, given we are where we are, we're going to just continue to, we've got a week for this to bounce and get, and to come up. But if on Monday, this is still languishing, then we may just say, you know what, that's it, we're out. Okay. But it doesn't have to take a long time to review these trades. Now, we have 10 minutes left. We've placed 3 trades. We've done 2 on Apple and 1 on PayPal. I'd like to look at least one other. And so let's look at Ross Stores. So Ross Stores has been on the struggle bus. It's up 11%. I don't know if you'd call this a staple or consumer. They're calling it just consumer discretionary. And that sector's been really strong. And so could come to Ross Stores and say, hey, this gapped up on earning. If we want to come and look at, what are the pundits saying? Well, if I come down here, Baird lowered their price target from 175 to 180. Well, that's not what we want. Guggenheim maintains a 180. 180 is so high, it's off the charts, right? Like it's off our chart. Here's 175. It's currently trading at 154. So Guggenheim reiterates a 180. JP Morgan raises to 173, raised to 180. Gordon is raising. So, JP Morgan raising, Goldman Sachs raising. So there was just one Evercore raising. Did I read that one wrong? So there's about 10 of them here, 5 to 10 of them, and they're all raising their price targets. So, could we be bullish on this? And might we say, well, hey, might this continue on up? And we could put in here and say, hey, when this gets to, this 159, if it looks like it's not going to continue on up, could we exit this position? We could. So we could put an alert here to say, hey, let us know when it gets to that 150 and say, do we exit our long call vertical at this time? If that's the trade we choose to place. Now, others might say, well, it's been kind of consolidating. Don't you think it would be more conservative to do a short put vertical? And I like the way you're thinking that could certainly be a choice. And we just bounced a few times off this like 153-ish level. So could we come out here and look at, maybe this 150? Or could we come out here 21 days out? Not much premium here. So we probably couldn't get enough premium for it to be worth our while. With the January 10th. These are still $5 wide strikes and we have almost no volume here. So we don't have enough volume to meet our requirements. But if we look at this 150, the next question is, can we get enough premium? Well, we're getting $1. And so that's a 25% return on our risk because we're risking 4 and we'd be in it for 35 days. So it's like, yeah, that's not enough premium. We want 35% or we're not going to play. So we're going to pass on that. But it was a good thought. So could we do the 150 to 155? It's already $4 of the way through the $5 wide strike. And we may not be able to do it. It may cost too much. So this would be 3 to 450. So it just has to go up by not quite $1 and we'd be through both strikes. Now, could we do the 155 to 160? We could, and that would cost us less, but the probability of it being in the money at expiration or coming up and hitting that top target falls dramatically. The 160, you have a 54% chance of it even touching that. You have a 92.8% chance of it hitting the 155. Okay, so we're going to go with this 150, 155, where the probability of success is higher. And we're only going to do one because this costs us $300. And you know what? We don't want to risk 600. And we could lose all of it. Even though we're not intending to lose, we're putting this trade on, expecting that it's going to be a winning trade. 450. So that's 50% higher. Make that good till canceled. Confirm and send. How much are we risking? 300. How much can we make? 200. We're saying, hey, if we can make 150 of that, happy campers. We're going to put that in our long call vertical bucket. Okay. So we did 3 trades on Monday. We did 3 long call trades. We did one on SMCI, and that one was a bust. It hit our exit the next day. We did 1 ATR targets and exits. And when it's really the most painful is when it hits the stop the next day. Because that's when you tend to lose the most, because after that day, we start snugging the stop up, and we didn't get a chance to snug that one up because we were out for a loss. Microsoft hit our target yesterday. This was our 1 ATR target. It came up, hit it, and we were out for a 60% gain, 64% gain. So on the first trade, we lost $289. Second trade, we made $355. In PayPal, we did 2 trades and we put on 2 different targets, and we'll discuss that one on Monday. So one we have exited for a loss. The second one we're still in. So we'll just see how that one goes. So guys, I want to thank you for being here today. It really, helps bring this class to life, how participatory you guys are in the chat. I thought, it always tickles me. I'm sorry that I wasn't able to hop in early. That's a very rare thing for me. I'm usually in there like a dirty shirt. So as somebody asked if we could look at AVGO, we placed an example earnings trade. Kind of I wrestled with myself, and we did a bullish trade on that, and it gapped up. So that was a losing trade. We're close to our max loss, so we're just going to wait and see if it comes back down a bit over the next week. But this is a perfect illustration of why in this class we choose not to do trades over earnings 99% of the time, because they tend to be binary, either a great success or you're calling the caterers to host a pity party. And there is often not a lot of in between. So here's what I ask as we wrap up. If you would please hit the like button. It helps move this up in the trading algorithm so that more people can find this content. It also lets Mike and I know that you found this to be valuable. So do me a favor and hit the like button. If you haven't subscribed to the channel, the button in the bottom right will take care of that. It's another free resource. And if you're not following us on X, what are you waiting for? Mike Fairborn CS, Barb Armstrong CS, be there, be square. It is Friday. I'll be back in an hour to talk about advanced options. But if I don't see you before the weekend, have a wonderful weekend. Get out and hug someone you love, and I'll look forward to seeing you in this class on Monday. Up next is Advanced Charting with Cameron May. Take care, everyone. Bye for now.